In today's episode, we're going to focus on this golden Bitcoin chart just to better understand where we are in the cycle and what we can expect going forward. So subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward. And of course, feel free to sign up to the free Rekt Capital newsletter in the link in the description down below. So let's dive into today's video. And this golden Bitcoin cheat sheet really gives us a good idea of what to expect in terms of bull market peaking. Post 2016 halving, we saw Bitcoin peak 518 days after the halving. In the 2020-2021 cycle, it took a little bit longer, 550 days after the halving. So it's safe to assume that we're going to see something similar, 518 days or 550 days after the halving, which brings us to September, October 2025 as a peaking zone. But also, if we're going to take into account that we may be expanding naturally in these traditional halving cycles, then an additional 30 days, because of course from 518 days to 550 days, adding 30 days more, which would bring us to 580 days after the halving, that would get us into November 2025. So cycle expansion, pretty normal by standards of history if we consider an elongation in the cycles by 30 days each 4-year cycle. So that's something to really consider. But one of the other things that's really important are the trend lines, the macro triangles that we see here. So these diagonals are pretty important in outlining a bull market peak and also a bear market bottom, and then cycle acceleration into a new bull market. So these macro triangles, these diagonals are pretty important, and we're going to see another diagonal form in the future as well. So back here in October 2022, I was talking about how around 20K we were very close to a bear market, a generational bear market developing a bear market bottom after losing that triangular base here. And over time, of course, in March 2023, we saw that bear market bottom develop and price broke that downtrend, and the rest is history. We got a bull market from that, and that's where that tweet was, and this is what we've seen since then. So it was definitely worth being in the market at that time, following the analysis. So if you want to sign up to the free Rekt Capital newsletter, feel free to click in the link in the description down below as we navigate the remaining parts of the cycle, because this is where we are by standards of history right now. This is where we are, the orange circles here, with not too much left to go, really, just a slither left. 2 to 3 months or so. If we expand, maybe that's 2 to 4 months. If people talking about the 2026 cycle expansion and bull market peak occurring, then I think it's a little bit too premature to talk about that, because even when we look at these macro downtrend breaks, for example, by standards of history, this was an acceleration, a strong uptrend here, if we're looking at this macro downtrend break, whereas here we saw cycle acceleration and then consolidation. So this consolidation was already underperformance by standards of just looking at this portion of price action. And if we look to here, for example, we broke out and moved sideways. So this cycle portion was underperforming compared to this portion, and then also this portion. But then later in the cycle, we got new all-time highs prior to the halving. So this is where we completely outperformed all the other cycles. So there are periods of overperformance and then underperformance, overperformance, and then once again we're in a period of underperformance. But over time we're going to be overperforming again to reduce that underperformance as much as possible. And this is what these cycles are all about. But back to that macro diagonal here, because this macro diagonal here, it will be pretty important to pay attention to it going forward. We saw a 42-degree angled macro diagonal here, and 34 degrees is what we saw here. So could we be seeing a declining rate of this angle by 8 degrees? And it's pretty phenomenal why it's 8 degrees. We'll just notice that in a chart or two. But in the future, we'll probably see this sort of diagonal develop. And of course, breaking that diagonal later on is going to set off a bull market. But in the meantime, this is the sort of bottoming out that we're going to have to watch out for in the next bear market bottom. So that's something to keep in mind in the future. But that 8-degree change Isn't it phenomenal to see that this 8-degree change here is something that we tend to see across time anyway? And this 8-degree change is effectively a trend line that rejects price in the pre-halving period quite substantially. We saw that in the 2020 cycle, but also in the 2016 cycle. And once we break this trend line, we rally to new all-time highs 214 days after the halving. Now, of course, this happened in 2020 and 2016. In this cycle, in 2024, we rallied to new all-time highs before the halving. But what's pretty phenomenal to see is that we still rallied to new all-time highs 214 days after the halving. The only exception was that was the second new all-time high in the cycle. But this 8-degree angle trend line here is pretty compelling, just showcasing that in the pre-halving period we break this, or at least resist from this trend line. That's what was in the past pretty convincingly, but we've broken that in the pre-halving period in this cycle, and then afterwards 214 days after halving, we break to new all-time highs yet again, which is something that's replicated in this cycle as well. So you can see that the 8-degree angle here, the 8-degree angle trend line, is pretty important when it comes to understanding where pre-halving rejections might occur. And it's also a pretty important trend line to break when it comes to breaking to new all-time highs 214 days after the halving. But this 8-degree angle trend line is pretty interesting, how we're seeing a declining rate of this trend line when it comes to the macro triangles, of course. So this diagonal is 42, this is 34, and probably in the future we'll see a 28-degree angle as well. We just don't know where the bull market top is at the moment, but it's going to be somewhere around here. And then from there we're going to see a diagonal develop, and then it's going to be all about deducing this base, because this base is a base that's going to be a support for an extended period of time, and then there's going to be a period of price compression to force price into downtrend acceleration, and that's been the case in these cycles, and we're probably going to see that also in the future. It's just not quite clear exactly where that's going to be, although perhaps this could be a very likely candidate for that in the future. So it'll be really interesting to see how that exactly plays out, but already we're planning for that eventuality because we look quite far into the future so that we're ahead of the game, so that we have an edge in the market. So feel free to check out the free Rekt Capital newsletter in the link in the description down below to just stay abreast of all these changes. But the golden cheat sheet is all about understanding where that bull market peak could occur, and it's probably going to occur somewhere around September, October, maybe November. And in the meantime that we have those 2-3 months left, Bitcoin could still break out to new all-time highs and overperform yet again. And in fact, if we're expanding in the cycle at this moment, that sort of breakout would reduce the expansion in the cycle, and who knows, if we really expand so much, that could actually instill some new acceleration in the cycle, which would be pretty interesting. But that's a story for another day. Stay tuned for new videos, subscribe to the channel for more videos like this, and if you like this video, if you enjoy content like this going forward, then check out my other video here as well on the channel. Speak to you soon.